Good morning, Richard Calhoun, Creekside Realty, 40 years experience here in the Bay Area. We're here today to talk about the real estate market statistically. The slides that are flashing in front of the screen are what we're going to be going over in roughly the next 35 minutes. Real estate data is very cyclical. There's a weekly cycle, there's a seasonal cycle, there's an annual cycle. And what I'm doing is trying to capitalize those cycles so that it minimizes the impact on real estate. I do that by, instead of using a calendar month, I use a week. I use 5 weeks for my calendar month. So I use 35 days. I gather the data on the same day of the week to get rid of the fluctuation. For example, inventory fluctuates as much as 20% during a week. This is the summary of the heat maps that we'll be going over next. We'll come back to that after we've looked at each heat map. This is looking at the number of active listings compared to normal. So normally, if you have a lack of inventory, which is what we currently do right now, in fact, in Milpitas, North Valley, Berryessa, and Santa Teresa, you can see that it's only 26% of the level of inventory you'd expect it to be. That would tend to indicate a very hot marketplace favoring the sellers. The one exception is Foster City right now at 121% of normal. But remember, Foster City, Redwood Shores is a very small micro market area, especially when we're only looking at single family homes, eliminating the townhouses and condos. Now we flip it over and look at the buyers. What are offers happening? And offers are also way below where you'd expect them to be. And a low number of offers favors the buyer, and that's why everything's shaded blue. The real importance is the number of active listings compared to the number of offers. And here you can see San Mateo County is favoring the buyers and Santa Clara County is favoring the sellers. And that's because in Santa Clara County, the DUI compared to the normal is basically 50 to 80% of where you'd expect it to be. A low DUI means the market's turning quicker. In San Mateo County, you can see those numbers are basically 150 to 200% of what you'd expect. So the market's much slower than you'd expect. And then again, I do not have the data for the first 3 slides for Alameda County. Now we're looking at just the raw count of days of unsold inventory. So this is what is days of unsold inventory today, not worrying about what it is anywhere else. And you can see a lot of the areas are red, including in San Mateo County. So even though San Mateo County is doing a slower market than it normally does, their days of unsold inventory are in the ballpark of 40, 39, 30, 48. It's still a fairly fast marketplace. The one exception is the expensive areas that has a days of unsold inventory of 113, which favors the buyer. And that's the only blue area on the map this week. For those that may not understand what days of unsold inventory is, which is really the speed of the marketplace, this is a measure of the 75th percentile seller, how long is it taking to sell their property. So basically the long typical seller, the third quadrant seller, how long is it taking to sell? And you can see in Santa Clara County, that's just about 2 weeks in a lot of areas. A couple weeks are approaching 3 weeks. In San Mateo County, the numbers are spread out a little bit more, hitting 88 days for the expensive areas, 61 days for the coast. But if you look at the bulk of the areas, ignoring Foster City because it's small, it's right around 3 weeks. And then if you go over to Alameda County, it's closer to where Santa Clara County is, with most of the areas coming in right around 2 weeks. Some areas like San Leandro, and Hayward coming in at 14 days, but then you have Castro Valley, Dublin, and Livermore coming in at 12 days. Now what we're doing is we're looking at the average ask price adjustment. In Foster City, this particular week, looking at the data for the last 5 weeks, sellers have actually raised their price 0.4%, and that's pretty unusual, but you can see that's also happening in Newark. Now, this is a very tight criteria because sellers do a lot of research before they put their home on the marketplace and try to put it on the market. And that's why you can see that basically a hot marketplace is basically from 99 3/4, which means quarters of 1% of a reduction, to 1/10% above the asking price. So if sellers are raising it more than 0.1%, like in Foster City and Union City, then you're saturated red. But then you also have a tight criteria on the downward side. Once you're above 2% reduction, that's saturated blue. In San Mateo County, where you have areas at 3.4 and 3.8% reductions, they're saturated blue. The reason this is so tight is that research, if the bulk of the sellers are putting their house on the marketplace at the fair market value, then they don't have to do a price reduction. Also, if 75% of the homes are selling in 2 weeks, the sellers really don't even have time to do a price adjustment. Now we're looking at the frequency, and this sort of ties in with the average that we were just looking at. How common is reducing the price? And in Santa Clara County, you can see most of the areas are under 10% of the sellers reducing their price. In San Mateo County, it's roughly the same. Two exceptions are the expensive areas where almost 40% of the sellers are reducing their price, or the coast where 50% of the sellers are reducing their asking price. Those are pretty unusual numbers, and it's just an indication of the market slower. When the market's slow, sellers get frustrated. They have plans they've made and they have to move on with those. And so they lower the price to entice the buyers to come in. And you can see Alameda County is basically low double digits or high single digits. Here's now looking at the magnitude of overbidding. This is where the buyers come in and they found the house they want, but there's more interest in it, or there's at least perceived other interest. And so they may go in over the asking price. You can see in Santa Clara County, the overbids are probably right around 7.5%, maybe on average, if you sort of take a number. You got some areas like Saratoga, Los Gatos, and Gilroy that are under 2%. But then you have areas in like Cupertino, Sunnyvale, around 10% of the overbid. So that means when you put in all the sale prices and look at the list price of the individual transaction, buyers are paying almost 10% above the seller's asking price in Cupertino and Sunnyvale. Much more mild in Alameda County, probably closer to about 5.5% or something of that order. San Mateo County is even lower, somewhere around 3%. But you can see the shades of pink. Santa Clara County is sort of a pretty intense pink. Alameda County is not much lighter, but San Mateo County is pretty white in color. Now you're looking at the frequency of overbidding. So just like with ask price reductions, you have the magnitude of overbidding, and then now you have the frequency of overbidding. So how common is overbidding? Well, in Santa Clara County, basically 2/3 to 80% of the sellers are getting more than their asking price. So it's actually fairly common. If you go up into Alameda County, it's right around 0.75%. And if you look in San Mateo County, you're probably right around 50%. So half the sellers getting more than their asking price, half less. And since I've been pointing it out, if you go over to the expensive areas, only 23% of the sellers are getting more than their asking price, and on the coast, it's 30%. Now what we're looking at is the appreciation of median price for the last 9 months of 2015. And I picked that because I have data going back to 1997, but all the micro market data, especially Alameda County, I only have that to 2014. So I looked for a price point where there was price stability. I was hoping to get a whole year, but it was only 9 months. So that's why it's 9 months of 2015. This is the cumulative appreciation. The standout that I did not have time to look at is the expensive areas in San Mateo County. I suspect this is a data error. A data error happens when someone adds a couple extra zeros when they're reporting a sale price. That's unlikely because one or two listings like that isn't going to affect the median, and that's what I'm looking at. But I don't understand why Atherton, Menlo Park has the highest appreciation rate. It's standing out like a sore thumb. It makes a lot more sense that Pleasanton is second at 93%, because what's happening is people are saying we can drive further because we don't have to go into work all the time, or we have more flexibility so we can go in earlier or later and thus avoid the hassles of the rush hour commute, or at least decrease the inconvenience of the rush hour traffic. And therefore we're willing to commute a little bit further. And then here is the median price for the given area in the middle. The number to the left is the 10 percentile, and the number to the right is the 90 percentile. So 80% of the homes in South County sell between $900,000 and $1.9 million. So there's $1 million range where 80% of the homes sell. This is really helpful for the consumer on knowing what price sort of to expect in different micro market areas. And yes, you can find a house occasionally under $900,000, but that's going to be less than 10%. And there's going to usually be something wrong with that when you're looking at the outliers like that. And this is where percentage come in. Most people follow just the 10%, but by sandwiching it, I feel it's a lot more useful piece of information. Here's the summary of the data that we just went over. So you can see that we have a shortage of active inventory, which is why it's red. We have a shortage of active offers, which is why that's blue, favoring the buyers. When you look at the ratio compared to the normal, Santa Clara County is hotter than normal. San Mateo County is much cooler than normal. Sorry that I don't have the color code for the DUI currently, but very similar is the number of days on market at 75th percentile. So here I'm looking at the 75th percentile, the long typical seller. How long is it taking you to sell? Santa Clara County, 2 weeks. Here's your price adjustments. Negative is a reduction. There's a positive, and I should have coded that black, as well as this one down here. I do have the negative sign to emphasize it's a reduction. Lack of a positive sign is still an increase. The frequency of price reductions, the magnitude of overbidding, you can see Alameda County is sort of the strongest one. The frequency of overbidding is a little stronger in Santa Clara County, at least in some of the areas, but Alameda County is a very strong second. Then here's your appreciation, and again, it's sticking out like a sore thumb. Atherton is showing the highest appreciation. I'll try to have an answer for that for next week on why that happened. And it happened because the median price is $5.6 million, but why is the median price higher than I would have anticipated it being? And then we didn't talk about it before because I don't have a heat map for it, because it'd be the same as the price. This is the payment. These payments are just ballpark numbers. They're using the average jumbo rates, and yes, you can beat the average jumbo rate, especially if you have 401k money or something like that you're willing to transfer over to a bank. One bank offers 0.75% reduction off their going rate for people that transfer a large sum of money. Now we're looking at, instead of micro market areas, we're looking at all of Silicon Valley in a blender. That's all of Alameda County, all of San Mateo County, all of Santa Clara County in a blender. And what we have here is we have inventory at only 57% of where you'd expect it to be. You have offers at 68%, which is higher than the lack of offers, giving us a faster DUI at 81%. Remember, a fast DUI is a seller's marketplace. The marketplace right now is 20% faster than it normally is for this time of the year. This is just a chart. I don't expect you to read every number on here by any stretch of the imagination, but I'm trying to drive home a real point. Last year was our previous record low in the last 25 years and the last 10 years. This year is quite a bit below that. In fact, right here, we're only 84% of the previous record low. We're selling 15% fewer homes than we did last year, which was our record low number of transactions. We're only 2/3, 66.7, very close, right at 2/3 of the median. So you look at the median over the last 10 years, and we're only selling 2/3 of the homes we'd expect based on the last 10 years. This is the payments, and this is showing you the change in interest rates and price of the house. This is the 90 percentile. So in Silicon Valley, a person going out and buying the 90th percentile home, i.e. sort of the most expensive, with an 80% loan using the national jumbo rate would have a payment of about $23,400. If they bought the median price, it would be about half that at $12,100. And if they bought the cheapest priced home, they would be about $6,900 a month in payments. That includes taxes and insurance and principal, the loan payment. Now, again, I don't want to scare someone away because these numbers are so large. You can beat these numbers depending on your financial situation. Now what we're doing is looking at the ask price, and we're starting off 12 months ago with dotted lines. We're going to go every month until we hit 3 months. Then we're going to go 12 weeks and every week until we hit plus 1 week. Plus 1 week is because I look at my data on March the 1st and every 7 days after that, my data actually ends on August the 9th, which is in the future. So I use the August 9th data is only through midnight last night. I go back 35 days, so it shifted, but it's as close to an apples to apples comparison as I can do and have the data for you on the weekend. So here we are stepping through every month. And now we're going to go to week. There's 12 weeks. Now that's sort of the peak of the marketplace. Now you can see that we've come down. This is saying that the number of sellers taking price reductions has actually increased. This is the distribution. So more sellers are taking bigger price reductions. You can see the peak was up here. It was about 6, 7, 8 weeks ago now. Now we're flipping over and looking at what the buyers are doing. Same concept. We're going back a year. We're doing every month for until we hit 3 months ago, and then we're doing every week. And this is the distribution of the sale price to list price ratio. You can see it's more stable. There was the bottom of the marketplace. Now we're sort of at the peak. And if you look at the last couple weeks, there might be a slight downward trend starting right about here. See that down? It's not very significant, but that's what you'd expect when sellers start taking bigger price reductions. That usually happens when the market cools. When the market cools, buyers usually tend to take a little less aggressive overbidding. So it looks to me like maybe last week was the peak of the overbidding. It's very close to the peak this week. It could go either way next week. I would actually expect, based on the frequency of ask price, I'd expect it to continue down the slightly downward trend. Now what we're doing is looking at the inventory, comparing it to the past 10 years. So this is the most inventory you'd expect up here at 3,500 listings in Silicon Valley. The typical you'd expect is 3,050. The least you'd expect is 1,900. And here we are at only 1,755. So we have less inventory for the buyers to choose from, which to some degree could be explaining the lack of offers. Here is the number of offers accepted. Then a hot marketplace, we'd expect almost 2,900 offers. Typically, we'd expect 26 if we were having a normal market. The least we'd expect is 2,100. And by the least, that's the 10 percentile. Yes, there is a 95th percentile and a 99 percentile, and that's what we're in right now, where we're only selling 1,802 homes. So we're selling 300 fewer homes than the least number that you'd really expect to based on the last 10 years. And I'll go back to this slide for a second. Here you can see the huge annual cycle that I was talking about. And that's why I put the trends on there. Instead of the graph lines being horizontal, there are these really curved lines. You can see we went from a hot marketplace in the beginning, first quarter, end of first quarter, beginning of second quarter of 2022, down to a very cool marketplace at the end of December. And the reason I'm saying the end of December, even though it's clearly into January, remember this is looking in the rearview mirror by 5 weeks, basically right around January 19th, looking back 5 weeks, you sort of have the least, because you sort of have the impact of Thanksgiving and the impact of Christmas and the impact of New Year's, as well as things like Hanukkah. So all the end of the year holidays impact the data right around January 19th. Here's the days on unsold inventory, the same concept. The slowest you'd expect is 47. Typical is 42. We're at 34, which is exactly halfway between the hottest you'd expect at 26 and the typical you'd expect at 42. And again, this is all of Silicon Valley in a blender. So you're taking the slower areas like San Mateo County and blending them in with the faster areas like Santa Clara County and Alameda. Here you can see that we're at 82% of the DUI that you'd expect compared to typical. Typical would be right on the black line. Down here is indicating below the black line is a hotter marketplace. Above the blue line, black line is a cooler marketplace, as you can see by the horizontal line at the top and bottom. Now what we're looking at is the 75th percentile. Seller, how many days is it taking them to sell their property? You can see the least you'd expect is 18. Where are we at? 18. Yes, they're plotted slightly different, but they're still both rounding to 18. 24 is where you'd expected the market to be, so it's basically almost a full week faster than you'd expect. The slowest you'd expect is 27 days, so we're 10 days faster than the slowest. Here you see days unsold inventory is only 76% of where you'd expect it to be, so a faster marketplace, which is why you have the red line at the bottom. Here's the asking price reductions. Now, this is interesting because we're right where the ask price reductions should have been. We spent a couple weeks below, but we're right there now at there, and it's 99.1 and 99.1. Where you'd expect the market to be is the black 99.1. Where the market actually is today is the purple 99.1, and you can see they're slightly off, but again, within 1/10% of each other. The least reductions you'd expect is 99.5. The most you'd expect is 98.3. So you can see that's a pretty tight criteria, only a little bit over 1%, 1.2% fluctuation between the least over amount of price reductions and the most price reductions. Now what we're looking at is the sellers that are taking the biggest price reduction. How much are they reducing it? So the sellers right now that are reducing their price the most are reducing it. It looks like that's 88.9%. So basically 89%. So that's a 11% price reduction. The most price reduction you'd expect is about a 13.5% price reduction. The least price reduction you expect at this time of the year is 9%. Now, this is only the 10% of the sellers that are taking the biggest reductions. So that's why this number is so spread out. I'm trying to give it a little bit more sensitivity. You can see how it just plummeted starting about the middle of February of 2022 and came right down. So it's sort of a leading indicator when you look at the extremes. But one of the problems you have when you start looking at 10 percentile instead of quadrants is the data is more unstable. But if I looked at the 25th percentile for price reductions, the numbers would get reduced dramatically, which is why I picked 10%. Here's the reduction of 10%. So right now we're basically right at typical. We're at 102%. Typical would be 100%. You can see right before the market collapse, we were very hot down here. You can see that most of 2022 and the early part of 2023, we were above the amount of price reductions you'd expect. So here we are in the frequency of ask price reductions. So how common is it? Right now, 13% of the sellers are doing a price reduction. The least you'd expect is 11%. So it's actually a pretty favorable marketplace still for the sellers. Typical would be 16%, so 3% less sellers are taking price reductions. And it's half of what the most you'd expect. You'd expect 26%. We're only at 13, so that's half. Now you can see that it's at 79%, call it 80% of the reductions you'd expect. Here's the average overbidding. We're right now at 6.8% in all three counties. The most you'd expect is 7.6%. So we're getting pretty close to the most. We're above the typical. We're halfway between the typical and the most aggressive overbidding you'd expect. The least overbidding you'd expect is 3%. So again, the range is pretty narrow. It's from 3%, almost 4% to 7.5%. So only a range of 3.5% roughly. Here's the frequency of overbidding. So how common is overbidding? Right now, 69.2% of the sellers in Silicon Valley are getting more than their asking price. You'd only expect 67. So close, but we're getting a little bit more overbidding than you'd expect. The hot typical marketplace would be 75%. The cool marketplace would be 56%. Here's the price over time. So you can see in 2021, 2022, we were above the rate of appreciation you'd expect. You can see at the end of the year in 2022, we were way below. We climbed up in 2023, and we're now just a little bit below. We're not back up to the peak pricing of somewhere around 1750, call it. We're 200,000 short, so we're still a little, what is that, about 12%, 15%, somewhere in between. So we have probably about 13% below our previous peak. Now what we're doing, instead of looking at the whole Silicon Valley in a blender, we're looking at each county. So for those that want to look at one county or another, Santa Clara County is going to always be in the blue, San Mateo County in the orange, and Alameda County in the gray. What we're looking at now is the number of active listings. The real takeaway is look at what happened in Alameda County and Santa Clara County. Pick any number you want, but it's going to be some number averaging up here around 1,400 until we got into the superheated marketplace. Now we're only at 600 and 700. So we're roughly half those volumes. San Mateo County really is not seeing that kind of change. And that's interesting to see that one county is performing so much differently. And again, if you look at this, what we really have is a pandemic shift. What used to be very desirable properties near the job centers that buyers were willing to pay a premium for, so they had convenience of work, those premiums have gone away, which has impacted areas like San Mateo County more than Santa Clara County or Alameda County, and it's benefited areas like the Central Valley. Now what we're looking at is number of offers accepted, and you can see both Alameda County and Santa Clara County are very close together at somewhere around 750 homes. You can see that the long-term average is probably somewhere up here around 1,200. And again, that reduction isn't 50%, but it's 2/3 or even a little bit more than 2/3 of reduction. San Mateo County has had a reduction, but not as severe, 360, and maybe the average up here might be somewhere around 550. So definitely a reduction, but not the same percentage as Alameda and Santa Clara County. Now we're looking at days on unsold inventory, just the raw count. The fastest county is Santa Clara County, followed by Alameda County. San Mateo County is the slowest, and you can see it's really slowed down this year. Even after the pandemic first happened in 2022, 2021, and 2020, it was right in there. It may have been a little bit slower right off at the beginning, then it caught up and was performing like the other three counties. But this year it's really pulled down and slowed down compared to it. And that's sort of interesting because before the pandemic, San Mateo County was traditionally one of the hottest counties. There was exceptions where Santa Clara came and caught up to it. But in general, you can see that the orange line is on the bottom of the three lines. Now we're looking at the days on marketplace, so this is pretty straightforward. Alameda County and Santa Clara County as a whole are right there at 18 days. San Mateo County clearly much slower at 31 days. So it's taking almost double the time to market a property in San Mateo County as it is in Alameda and Santa Clara. Now remember, this is not the typical seller. This is the long typical seller at 75th percentile. Here's the magnitude of list price reductions. So you can see that San Mateo County is doing a 1.6% reduction. And if I look at my numbers, that looks like a 0.6 of a reduction in Alameda County and Santa Clara County. So just a little over 0.5% reduction in two counties and 1.5% reduction in San Mateo County. So triple the price reduction if you want to look at it that way. I think the magnitude is more significant than triple, but now what we're looking at is we're looking at the ask price reduction frequency. How common is it? Basically in Alameda County and Santa Clara County, only 11% of the sellers are taking price reductions. In San Mateo County, 19%. That basically says that sellers' expectations and listing agents' expectations are higher than the marketplace in San Mateo County, and therefore they're doing bigger price reductions to entice the buyer to come in with their offer. Now what we're looking at is the magnitude of overbidding, and it's the least in Santa Mateo County, the second in Santa Clara County, and by far the most in Alameda County at 9% above asking price. When you put all the buyers in blender, they're doing almost as much overbidding as Cupertino Sunnyvale area, because that was either 9 or 10%, and this is 9.2% for the entire county of Alameda. Now we're looking at the frequency of overbidding. How common is overbidding? Clearly the least in San Mateo County, just over 50%, 2/3 in Santa Clara County, but 3/4 in Alameda County. So Alameda County is seeing the most overbidding, and again, that's the driving factor is you have areas like Livermore and Pleasanton that are longer commutes that are more desirable now. Buyers are overbidding, but they're going there because their budget most often, and therefore the magnitude of their overbidding is restrained, even though the frequency of overbidding is quite a bit higher. Here's the appreciation since the last 9 months of 2015. Santa Clara County as a whole is doing the best at 81% or 80%, 81% appreciation. Then Alameda County next at 72% appreciation, and San Mateo County coming in third at 65% appreciation. And you can see that they were all doing very similarly until about June of 2021. And that's when San Mateo County started to really fall down on the appreciation overall. And Santa Clara County has pulled up this year. So Santa Clara County is seeing more appreciation this year than you would expect. Here is the current median price, 1.9 for San Mateo County. It's still the most expensive county, followed by Santa Clara County at 1.7 and Alameda County at 1.3%. Here's the same information on regular paper. The first one was on log paper. Here are the payments for the three counties. So San Mateo County, 14.8, so $14,800. Santa Clara County at that did not get updated. That's clearly lower. That's less than 14,000 for Santa Clara County. It's about, I guess, about 13.7. Sorry about that. And that's the only one that doesn't look like it got updated, because 9.9 looks right for Alameda County. So just under 10,000. And again, you can get lower payments by shopping around, not paying the average, by doing an adjustable loan, by having 401ks transferred to the lender that's doing your home loan, because a lot of them offer discounts if you transfer large sums of money. Now what we're doing is looking at a quick recap of the actual raw numbers. And right off the bat, this huge increase in activity, new listings may catch you off guard, but we're looking back 5 weeks. If you go back to last week and go back 5 weeks, you included July the 4th. You have less impact of July the 4th this week, which is why the increase. So the increase isn't what happened just this last week, but what happened on the week that got dropped off. So basically now 6 weeks ago. Number of active listings in the 3 different counties, number of offers accepted, the DUI, which is a real key indicator, and then your closed data. And again, you can look at whatever data you fancy. Now we're going to leave Silicon Valley and look at the Greater Bay Area. This includes 13 counties and 5 regions. We're looking at Silicon Valley being the 3 counties we just talked about, the cities being San Francisco and Marin, North Bay being Sonoma, Napa, Solano, Contra Costa, Central Valley being San Joaquin and Sacramento, and the Central Coast being Santa Cruz and Monterey. Now we're starting off in the reverse order and looking at the actual raw data. And it is noteworthy, in my opinion, to come up here and see that Santa Clara and San Mateo County are very close together in their median price. You go to Silicon Valley as a whole, it's a 1.5. But what's interesting is if you look at San Francisco and Marin, they're lower than either San Mateo or Santa Clara County, and they're very on a par with what Silicon Valley is, even after you bring in the lower priced Alameda County. And I'm just pointing that out because I think that's pretty unusual, and I think that's all part of people don't feel they need to live in the city anymore. They're willing to commute in and those kinds of things, so they don't have to do it as often. And if you think Silicon Valley had a big reduction in inventory, look at what happened out here in the Central Valley and the North Bay. They may have had something like 4,500 homes typically, and now they're down here at 2,200, which would be half, and 1,600, which would be close to a third of the inventory. So you can see all regions are down on inventory, but some regions are down in inventory more than others. Now we're looking at the number of offers accepted in the past 5 weeks, and you can see that the number of offers isn't down as much as the number of active inventory, but still down fairly significantly. You got about 1,800. Typically you'd expect more than 2,500. So you're off by, a third of your volume of offers accepted. Here's your days of unsold inventory. You can see that Silicon Valley is the fastest, but right on its heels is Central Valley. Then you have the North Bay. Then you have the cities. And finally, the slowest area is the Central Coast. And if you look back over time, you can see Silicon Valley is normally the fastest. Central Valley, it was doing pretty well, but at times it was in the middle of the pack. And for it to now be right at the bottom is of noteworthiness. What's probably more noteworthy is the cities, the dark orange. It's now second worst at 51 days, and it's normally historically very close to the second best. So it shifted probably the most. Here's looking at marketing time based on the 75th percentile, how many days it's on the marketplace. You can see the longest one is San Francisco Marin. The shortest is Silicon Valley. Central Valley is number 2. Central Coast and Central Valley are very close together at 34 and 35. Price reductions, you can see the same pattern. San Francisco and Marin taking the biggest price reductions, followed by the Central Coast, followed by the North Bay, and the Central Valley and Silicon Valley having the least price reductions at only 0.9%, and that's ask price reductions. This is the frequency of sellers taking price reductions. Santa Cruz, Monterey, the most. 3 regions very close together. Taking the least is Silicon Valley at 13%. So most of the area regions are around 21% of the sellers are doing a price reduction. Flipping over and looking at what the buyers are doing. Buyers in the Central Coast are at 5% above asking price, so not very much, but still above. Central Valley, these are the people, in my opinion, that are being restrained by their budget, 1.3% above ask price. North Bay, 1.9. Now Marin, sort of surprising, at 4% above. So even though it's seeing the least appreciation, it's seeing the second most overbidding, and the area with the most overbidding is Silicon Valley at almost 7% above the asking price. This is frequency. Silicon Valley the most at 70% of the sellers getting more than their asking price. Your 3 regions very close together at about 55%, and the Central Coast doing the least well at 42%. Here's the appreciation. Doing the least well is San Francisco Marin with only 31% appreciation since 2015. Doing the best is the Central Coast at 87%. And I think that's a fluctuation. They don't have a lot of properties, so it fluctuates. You also have a lot of expense areas in like Carmel by the Sea and Monterey itself, but then you also have a lot of inexpensive areas along 101 corridor. So it depends on the market mix. Silicon Valley here at 78% appreciation. The Central Coast would also tend to benefit from people willing to commute longer distances. Here is your sold price. You can see that San Francisco, Marin, and Silicon Valley are basically the same number at 1,550. Then you have the Central Coast at 1,150. You have North Bay at 800,000, and the Central Valley being the most affordable at 550. This is the monthly payments. The order is going to be the same. And with that, I'm finished. This was week number 31. We're talking about August the 5th. The green is what I call my root URL. That gets you to the archive on YouTube. You add in 2023, you get the live presentation Saturday morning. Add in the handout and the year, month, date code, which is over here. You get the handout. It's 58 pages. I don't give you every one, but I give you the vast majority. With that, I'll take any questions. Not seeing anyone unmute themselves, I will end the meeting. Thanks for joining. Have a nice week. Bye for now.